as the model of NBFCs matures in India, I would think the focus on risk management should increase. We don't need to wait for the regulator to specify it in A, B, C forms. You know what's the risk in the ground. You have to be ready to make sure that you are firewalling yourself so that you're not exposing yourselves too much to the risks that are prevailing, especially during periods of market stress or liquidity shocks. Risk taking must be well planned. I'm not asking you to be overcautious that you wouldn't do any business at all. But it has to be well planned and data driven and never beyond the absorption capacity of the entity concerned. It should never be beyond your absorption capacity. Liquidity and credit risks must be rigorously assessed and managed. And that's, I would think, the core business of saving and lending, keeping money with you and lending it for public cause. You should have internal controls, should ensure oversight, particularly on asset liability mismatches, nature and tenor of funding, and also the sources of funding, above all concentration risks. I think most often concentration risk is underestimated. I would want you all to give enough time and focus on that. So a sustainable business model must be the cornerstone of the sector's growth, and it should have a growth pattern which is going to be on sustainable credit landscape. Again, one more important line would be financial inclusion cannot be used as a pretext for financial exploitation. I say this consciously because we get repeatedly reports of how financial inclusion intent of the government, while getting executed in the ground, has brought in, I would believe, inadvertently, an exploitation element which has to be carefully weeded out. We do not want anybody having a sense of caution thinking that exploitation is justifiable when you're doing inclusion. It's not. Please go back with a clear message that financial exploitation in the name of inclusion is unacceptable. Lending should be based on genuine needs and repayment capacity of the customers, and loans should not be aggressively marketed or pushed. I hope, because you're at the last mile, these messages are going to be seriously taken, because that's what is going to be the underlying strength of NBFCs in the years to come. Interest rates should be reasonable. This I say despite you having to borrow at some highly rates which you would otherwise wish to be far lower, but you should work together with the scheduled commercial banks, talk to them, see how best you can raise revenue, and where the banks themselves are unable to give you. Today, for instance, I was just reviewing and looking at the data which was coming before me to see how the public sector banks on priority sector lending in the last few years, I have not completed that sentence, but I'm saying something else more here. In the last few years, I have been closely monitoring how public priority sector lending activities, so the banks are going on. Every year you have substantial amount left behind, which then gets repooled to NABARDs of the world and SIDBIs of the world, which of course they will take it up and they will further do something more. But I can't see how, despite banks' priority sector messages given to them, they are left with so much left behind. Is there a role that you can actively play through the NBFCs? Recovery practices of the NBFCs must be fair, empathetic and respectful, in strict accordance with the RBI's Fair Practices Code. Sensationalized reporting in the media, which they are right in reporting, I don't fault the media at all on this, where harsh measures are taken for recovery of a 500 rupee. Heartbreaking stories come out. I know for you it's important and it's part of your duty, but it's not part of your duty to be heartless. You need to have better fair practices code aligning with RBI's fair practices code. So the same message, the push for growth should not come at the expense of customer well-being. Let's be clear on that.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.